Good day, my lazy investor. Today, I would like for us to investigate Pick n Pay. Pick n Pay is one of the big four retailers in South Africa. They are currently trading on the JSE. I'm talking about their share price for 26 Rand and 29 cents. I have gathered information from your most recent 12-month financial statement for the period ending on the 25th of February 2024. Plug them into the lazy investing table, and these are the outcome. But before I actually talk about the outcome, I would like to specify that due to the restructure that's happening in Pick n Pay, we know that they have been having some issue. They came out with two types of financial statement, one for the group and the other one for the stores. Now I'm going to start now presenting the result from the store point of view. So from the store point of view, these are the ratio that we managed to come out with. The first thing that I want to point out here is the fact that the share price of Pick n Pay are highly overvalued in relation to the book value, standing around 1 Rand and around 50 cents, while the share price on the JSE is around 26 Rand. You can see highly overvalued. The second thing that I'm going to point out, the return on equity or investment, or in terms of the store point of view, it's about 67%. As you can see here, it's good. The debt equity ratio, in terms of the store point of view, linked to the share PIQ and the JSE is around 0.26, right, which is also good. And the price earning ratio, it's actually very bad. It's 26, so it will take you about 26 exercise if the dividend is the same for you to get back to your initial investment. Now, when it comes to the Pick n Pay, the group, right? When I say the group, it's because earlier on we were talking about the store, the Pick n Pay store. Now, the group now may include a sister company like TM Supermarket, the Boxers, and many others. So now, as per the group, the financials are presented, and what are the ratios saying? I'm going to present them to you right now. So the first thing that I can point out here and I can confirm is the share of Pick n Pay group are also highly overvalued, right, in relation to the book value, which is standing here for around negative 37 cents. Now, the second thing that I can point out about the Pick n Pay group is they have realized a return on equity on that last exercise of around 1,751%, right, which is huge. We must admit that. The third thing that I'm going to point out here is the debt equity ratio of the Pick n Pay, the group, right? The group Pick n Pay as a whole has realized a debt equity ratio of around negative 255, which means that they are highly indebted, right? And as you can see here in fine print, you can look at the total debt here being around 46.695 million, let's just say 47 billion, while the total equity is around negative 182 million, as you can see here, right? So, and we can also see here that the group has made a loss on the last exercise of around 3 billion, while I think on the Pick n Pay store they actually made a profit. I think it was about 500-600 million, something like that. So that's what I can say when it comes to Pick n Pay, the group, right? But one thing that is consistent and clear is the fact that share of Pick n Pay, whether store or group, they are highly overvalued. They have been facing difficulty for some times now, and if you look at the share price has been down for around 33% in relation to last year. If I look at the same month period, we're going to notice that there's a drop in terms of share price of around 33%. So based on the ratio that we were able to generate using the financial statement from the Pick n Pay store and the Pick n Pay group, 3 observations can be made. The first observation is the fact that the share of Pick n Pay are highly overvalued in relation to the book value, of course. The second observation that we can make is the fact that the return on investment on Pick n Pay as an investment are actually good. We saw that we had around 67% for the Pick n Pay store and over 1,000% for the Pick n Pay group. And lastly, the splitter remained the debt equity ratio. With the store, we saw that the debt equity ratio was around 0.22, while with the Pick n Pay group, the debt equity ratio was around negative 255. Now, to see whether Pick n Pay remain a good investment or not, we cannot say. We run the ratio and we presented them, and we have different risk profile. We look for different things. Look at the ratio by yourself, speak to a financial advisor to get proper financial advice, and then decide. But what you can do for us is you can share your view and comment and tell us what you think about Pick n Pay. See you tomorrow for the next company, which will be Checkers. Bye.